Hey everybody, it's Carmasino here at Chaikin Analytics. It's the halftime show on Stock Charts TV. And each and every week we kind of go over things that's going on in the market, calling out some different changes. And last couple of times we talked about some names that were breaking down, and that in an up market like this, especially after this Fed move, which is pretty incredible, by the way. I don't think a lot of people had this in their models, but really the market was kind of signaling this for weeks since the last pause in October. And so here we are in December. It's December 14th today, a day after the Fed meeting, the last meeting of the year. And the Fed's coming out saying, hey, we're probably going to cut rates. And so that's what it kind of looks like. Now, I was kind of talking about the unemployment rate needing to move higher for that to happen. But maybe that's what they see. Because the last report is it went lower by 5% or so. So, the issue is that it doesn't all add up the way it's supposed to all the time. But the fact is that the indicators and the technical analysis that we do here at Chaikin has kind of kept us in a lot of names. And so I'm just going to go over just a few big moves here on the markets. I want to just talk about the mechanics and what's going on. And I do have kind of a forecast for year end on the S&P, which is not, that monumental, given that there's only a few weeks left here in the year. But, just a continuation of the channel higher, it looks pretty interesting. We'll go over some things like the bullish percent on the indexes as well. I'm certainly going to look at TLT, and I want to look at oil on the chart as well. It's because oil has come all the way back under 70, right back into what we call the White House buy zone for the last year or so. It's a really interesting chart to me. It's just amazing how kind of things will migrate one way or the other. But the point is that we've got an incredible market here, and hopefully you've taken advantage of some of the things we talked about this entire year, especially the fixed income side of the market. So let's dive in. We'll look at the charts and kind of see where this takes us today. All right, look, I'm back here on the ACP platform, the new version here of Stock Charts. Not so new anymore, but it is to me because I've used the other version for so many years. But I wanted to look at the bullish percent. Now, I drew this last time. I forget, it might have been 2 weeks ago or so, maybe more by now, maybe a month ago. And I just saw like a divergence, right? What did I see? I saw the RSI of this signal. This is unorthodox, folks. I mean, again, probably not a lot of people are doing this on the bullish percent, but I saw it and I thought I'd call it out. What I'm saying is the RSI had, showed improvement with a higher low, even though the actual bullish percent index showed a lower low, right? So that's kind of divergence, right? Now, look at this. We're in a spot where this was traveling down. Now this is congruent. So I can move this higher. And now I've got the RSI really pinned on the upside. And look, we're at that level in the bullish percent where it shows it's a little overbought. Now, obviously, I'm just saving this while I'm talking here. Obviously, markets are overbought, right? They've come from some levels that we didn't expect and have traveled to some levels we didn't expect. So you've got to expect that you're going to see overbought indicators, and there's one of them. Okay. If I look at the New York Composite, not quite there yet. Okay. Not quite there yet. That to me is just more bullish. Why? Because this is a bigger index and a larger number of names on here, which kind of represents, again, a broader scope of what's going on in the market. So the NYSE looks pretty interesting here. When I look at the Nasdaq, it's going to be overbought. I can see it already. It's at 86, and 70 is sort of the area we would consider overbought. And obviously it is pushing and really, really pressing the highs here. And so again, I said it earlier, there's a lot of FOMO. There's a lot of folks kind of, reaching for the stars here and trying to, capture some things. And there are some names that are still available, I think, to buy. And they'd be in different sectors, not the ones that you would usually consider. Tech is definitely overbought. You can just see that by the index. Now, if I go down to the FANG index right here, I can see what happened here. I have a couple of charts. I like to look at the weekly one here. All right. We had rising rates here on the New York FANG index, and we saw the index roll lower. All right. Rates kind of flattened out a bit. And then all of a sudden, what happened is this index caught fire. Now, even though the market, now don't forget here, the markets were being dictated by bonds, right? And this little movement really from April up until October, right? What did we see? We saw sort of a continuation of the trend and then kind of a flat line here. But now the trend has continued back above some levels here we haven't seen in quite some time. And if I got to squeeze this all the way back, we are at new highs on this FANG index as well. Okay. And so that's just happening right now. Again, obviously it's overbought, but we can see what's happening is everything's going in the direction that's going to favor the upside of a lot of these tech indexes that we track anyway. We can certainly look at the transports real quick while I'm kind of scrolling through my sector overview. Let me look at there. Here we go. This is what I wanted to see. So this is the Dow down below, again, hitting new highs. And here's your transport index, not yet at new highs, but really kind of in the neighborhood, right? Close enough, I think, to call it and saying that Dow theory maybe still has some traction here, but just I thought it was an interesting thing that we can take a look at really, really quick. All right, so let's look at TLT. What an incredible move this has had. All right, from the target of 80 all the way up to here, pushing 100 again. And, I talked about this on several videos that, I was looking for 5.2, 5% was sort of psychological. I probably overshot it because I was looking at these last peaks where it happened. But look, 5% got me to the top of my range box, and then it obviously bounced from here. Now we're pushing 100, which is going to be somewhere right here, not far away, and that's going to be resistance. You can see down here. Now, again, bonds and interest rates don't, may not sort of heed these resistance levels like stocks do, but it is on the chart. The charts kind of draw themselves, and I'm just calling it out that could be a little bit of resistance, which means that could put, this area of like 390 in play. And, maybe that's good enough of a Goldilocks scenario for the markets to really, latch onto it and love it. Speaking of indications of market and economy, you got to look at semiconductors as well. So here's the semiconductor index, ripping higher. I got transports on the right move. And here's the S&P really pushing and probably going to get to some new levels here on the upside as well. So I said I had some targets here on the SPY. Again, not monumental, folks. I mean, the point is that when you look at these levels, you can probably kind of figure these out yourself and say, okay, I got, an idea of what's happening here in the S&P. So let me just find that correct one. Here we go. So this is one I kind of built and said, look, at year end, where would that put us? Targeting forward on the channel. It's somewhere between, this is the previous high, 48.25, and a new high of 5,045. All right. So that would just be about an 11% rally from this last area where we kind of consolidated and moved higher. But that's what I'm looking at. That's the target here on year end. I don't know if it's going to happen. Again, not a stretch at this point. A lot of things have materialized here, but given that we do have some time here, and this rally looks like it's really hot and on fire and ready to roll. All right, let's look at crude. Let's look at crude here, all right? And WTIC, right, West Texas Intermediate Crude. All right, we had this chart here for a long time. I laughed because I just thought it was funny. White House buy zone is 67 to 72. It bounces off there, goes, pushes up to the $95 range and then rolls over. Now look at this. We're getting, I would say, across here. Now mine's the 55 EMA. If you look up here underneath the 200, but this is getting into the area where if this breaks this support, we could see lower levels pretty quickly. Again, I have 50 and 75 as a line here because this is kind of where the range that oil probably should be trading and likes to trade and kind of live in between these and kind of revert back. So if we can get back here, I think obviously that's just going to be a relief all the way down to the consumer at the gas pump, but certainly for anybody who's out there running anything that requires fossil fuels, which, by the way, folks, is pretty much everything we do. So I think you're going to see an interesting setup here as well. And the last one I wanted to call out, this one's the IAI ETF. This one's breaking out. I think, obviously, the broker-dealer index and the banking index and financials in general have been doing really well. You can see what's going on there. I like that area of focus. And obviously, look at the KBE. You've got a golden cross there, moving higher. And that's again at 55 EMA over the 200. But look at the ratio as well. The 50 over the 200 here on the ratio is really pointing to something. So I would look at those two as and add them to your watch list. And the names inside these funds, these ETFs, could be pretty interesting. So that would be IAI and KBE. Okay, folks, if you haven't noticed, I got a sweater on. So I'm up in the colder weather area of the Northeast, traveling for some company meetings and a holiday party. So just wanted to come back and say, this has been great. I really enjoyed this video. I appreciate your feedbacks. Please leave it and let me know if there's anything I can do that would help you and be more valuable in showing you around sort of the system. I didn't look at the Chaikin system today. I wanted to kind of keep a broad view on the ACP platform. And the two areas that I think you should leave, keep these in your back pocket, are IAI, which is that broker-dealer ETF, and KBE, the banking index ETF. Look inside those funds. I think you're going to find some interesting opportunities there. So again, signing off, I'll be back next week again with the halftime show. I'm Pete Carmasino here at Chaikin Analytics. Thanks for tuning in.